Shares of French drug maker Sanofi taking a hit this morning. It's down 16% following the release of quarterly earnings. Maybe more importantly, the guidance for 2024. Also, the announcement of a plan to spin off its consumer healthcare business. And join us for an exclusive interview on a day when you really do need to do the interview, I think. Paul Hudson, Sanofi CEO. Anyone can take a victory lap, Paul, but this is a day where you need to, I think, explain to shareholders exactly what your view is of the company's prospects and whether the stock move is warranted. We'll get to the earnings for the last 3 months in a second, but for the outlook, you got tax changes, global tax changes, and you've got a big increase in investment for R&D. Which is more troubling or shocking to investors, do you think?
Well, let's take a step back. I mean, the results announced today are great results in Q3, of course. But I think, we announced some very bold moves to double down on our research and development. And I think perhaps that's where people were not expecting us to be quite so ambitious. The truth is, we think we can create more value for shareholders and even more importantly for patients by doubling down on our science, which has really matured and is really set up very well. And we didn't want to make a trade-off. We take the long-term view. Today may be a little bit disappointing, but we think as the dust settles and people get more familiar with our story, we have earnings call later, we have R&D day in December, start to appreciate the value. I think then we'll start to get back to where we need to be. We're very well positioned for the long term, and I think we're starting to show that.
Well, maybe the notion that you have to spend so much more is troubling to investors because of the state of the business right now, because third quarter net sales did fall to 11.96 billion euros, and all drug companies lose exclusivity of products, and you did lose Aubagio, the exclusivity, and that's part of the reason for the lower net sales in the current period.
I'm glad you raised it. It's our last major loss of exclusivity this decade. We're one of perhaps the least exposed companies in the entire sector, which is one of the reasons why we're able to double down on our science. We've had 3 major launches this year, not least for RSV, for hemophilia A, for type 1 diabetes. They're off to a great start. We also shared our confidence in those in our earnings numbers. But it's an important moment. We have such a rapidly growing pipeline of first-in-class, best-in-class assets. We have a choice to make. Do we go after them and try and show what we're really capable of doing and change the trajectory of this company? Or do we, pull our punches a little bit and optimize? We really can't do that. We have to go all in on our science. We're confident about what we're doing. We're confident in our launches. And we think, some short-term disappointment as we bring clarity for that, people will understand. And, we're very proud of the progress we made, frankly, since we laid this strategy out in 2019. We knew this moment would come, and it's an important moment. On the journey to being a pure-play biopharma company, we also announced today that we'll separate our consumer healthcare business. That's another declaration of our commitment to focusing on science and value creation.
Paul, you've given back almost a year's worth of gains in the stock. I think you're up about 20% year over year and down 16 a day. So maybe investors at this point, for 2024, you're talking about if you exclude the tax rate change, it's flat. If you include the tax changes, which are interesting, and why wouldn't people know about that? Your tax rate goes to 21% from 19%. If you include that, you're actually going to be down EPS in 2024, low single digits. Now, it takes some faith and some clarity for 2025 to say you're going to have a big year in 2025, but a lot of that is going to be generated from cost cutting, $2 billion in cost cuts, not the payoff from these investments, but you're going to be through 2024. You're going to be cutting expenses.
Well, what we announced today was that we would create a 2 billion euro spending plan, a saving plan. Within that, we'll reallocate the vast majority to R&D, and incidentally, we'll reallocate within R&D to the most important projects. I mean, that's our job, but we think we'll create more value that way. The tax piece is simply, it's known, but of course you have to declare what you think that will mean to you for the upcoming year. And we've just been very transparent. we were operating to a target on a BOI margin in 2025, and that's helped navigate us safely through some pretty difficult times for the sector and all sectors, in fact. What we've said is, watch our EPS will be broadly flat minus the tax next year. We'll rebound strongly in 25. And the sheer statement of being able to say that means we've increased our flexibility to be able to go after organically and inorganically where appropriate, the right type of science to create the most long-term value. If we stuck where we were, there was always a chance that we would have to let some opportunities go. Well, that's not the right thing to do for patients, for those with difficult diseases to treat. But it also means we're going to create the most long-term value possible. And we're well positioned for that. And for those that will join us at our Research and Development Day in New York on December the 7th, you'll get a real flavor for that. And, we're excited. Today, of course, we'd always like things to be better, in terms of stock market reaction. But with clarity, with information, we'll be in a very good spot. We're doing bold things for the right reasons.
They're wrapping me up, but the big picture, what caused the rise in the tax rates? It's a global thing? Is it you're based in France? And can we glean anything from that? Because I'd rather have you spend that 2% at 19 to 21. I also would rather have you put that right into R&D. So, I mean, this is kind of an example of why drug companies argue that the long-term benefit, you can probably generate more from the capital than maybe, we all need to pay taxes, corporations need to pay taxes, but this is impacting your ability to invest in the business. Where did it come from?
Let me be clear. We're running an increasingly more efficient business. We've made 500 bips improvement on operating margin.
Right. But where did it come from? Who raised the taxes? Why is it going to 21?
This is just a global harmonization of the changes in the rules. It's no one in particular. This is just getting to a global harmonized tax rate. It is what it is. But the reality is, our guidance that we've given is to say, hey, look, despite those little headwinds, we're so confident in our science and where we're heading, our readouts, our launches. We will power through, and we're well set. I mean, we're really well set for the upcoming and the rest of the decade.